Good afternoon all. Welcome to this webinar, Off-Payroll Working in the Private Sector, Preparing for April 2021. We'll give it a minute to allow everyone to connect. There are 146 of us on here today, so either this is really exciting or we're all getting lockdown fever, but you'll see coming up on your screen now a poll question, which we'd like you to answer, please. This is how confident are you that the changes are clear and you can finalise an implementation plan? This will give us an opportunity to gauge the level of understanding as we start, and we'll check again at the end just to ensure the session has been effective. So let me just give that a minute whilst you settle in, and we'll be ready to go. If you've got any questions as we go through the session, please send them via the Q&A button. And we'll answer as many as possible as we can at the end. Obviously, we won't get through them all, but we'll pick out a sample to help to add to the session. We've already had a few, so please let us have more as you can. Okay, right, I think we're ready to go then. Welcome to today's webinar, brought to you by VWV, a full-service leading UK law firm with 5 UK offices, which actually started in the early 19th century. And the Giant Group, a leading contingent workforce management company for 30 years, based in London and Manchester and working nationally. Our subject is off-payroll working in the private sector, preparing for April 2021. You may have seen our earlier event, which introduced the subject and gave an overview of the rule changes. If you'd like a copy of that recording, simply let us know through the Q&A button and we'll send that on. So, not surprisingly, many have left IR35 to the new year to-do list. So the need to address it is now urgent, and our aim today is to provide a more detailed understanding so that you can use that to finalise your plans. This session assumes your knowledge of the principles as we seek to delve into some typical scenarios and practical options where we've tried to anticipate many of your questions. The session will cover then, how do the IR35 rule changes apply to end hirers? An understanding of how you undertake status determination assessments and communicate to the supply chain. Drafting statement of work contracts. Agency and contractor obligations post-April 2021, and then a definition of PEO, co-employment models and employment status. Our keynote speaker from VWV is Michael Delaney. Welcome, Michael. Michael heads up the firm's recruitment sector, as well as being a member of the pharmaceutical and healthcare teams practicing employment law. His work involves advising primarily employers, including employment businesses, on a broad range of employment and regulatory matters, often litigious and before the Employment Tribunal and High Court. From Giant, we have Dan Haslam. Morning, Dan, who is Group Sales Director, and his role includes helping clients to manage their contingent workforces compliantly and cost-effectively using the whole range of Giant services and products. I'm David Hopkins, a workforce management consultant with Giant, and I'll be the chairperson for the session. The format today is going to be conversational. I'll put my own questions to Michael and Dan in order to give you a full view from a legal and practical perspective, and we'll then turn to questions from you, the audience. We do anticipate questions, so feel free to submit them as we go through the formal session. We've allowed about 15 minutes at the end to cover as many as we can. If you've got any very specific questions specific to your situation, we will, of course, we'd be able to approach the speakers afterwards with the details we'll send you. And just to say before we start, we are broadcasting remotely, so apologies in advance for any sound or technical issues. We look good at the minute, so I think we're ready to go. Let's begin. Right, good afternoon, Michael. If I can start with you. As a hirer, how do the new IR35 rules apply to me, and how should I prepare for their forthcoming introduction?
Okay, thank you, David. IR35, as I'm sure you're all aware, those listening, is an anti-tax avoidance set of regulations aimed at taxing disguised income through a contractor's personal service company. And hirers are caught if their turnover exceeds 10 million a year, their balance sheet value exceeds 5.1 million, and they have more than 50 employees. So as hirers, if you fall into that category, then the new IR35 regulations will apply to you. And that essentially involves you as hirers having the responsibility to determine the status of the contractor who's operating through a personal service company, and to make sure that all proper taxes are being deducted. And the other obligation as well is to communicate with the contractor the outcome of the status determination, and in particular whether or not the proposed assignment, hiring the contractor or their service company, is caught within or outside IR35, and you're expected to give your reasons and also a right of appeal. So that is an overview.
Yeah, okay. And one of the key activities you mentioned there is the carrying out of these status determinations. What steps do I need to consider when I'm doing this?
Right. I mean, firstly, obviously, as a hirer, you'll need to examine your own business operation, the nature of the business that you do operate in, and also, I think as a starting point, consider whether or not you are employing employees within the business who are essentially undertaking the same role that an independent contractor is being asked to do. And also, I think, asking yourself why you are engaging a contractor to perform this service when you've got employees that might already be performing the same tasks or services. So that's, I think, your starting point. I mean, also as well, consider whether the contractor's previously been employed by your organisation. But the starting point is to look at the check employment status for tax tests, which is the CEST test on the Hmrc website. That's your starting point to try and get an answer. It often doesn't give a clear answer. That's certainly some of the feedback that I'm getting from some of our hirer clients at the moment. And also going forward, there's always the risk that hirers will not want to be saddled with additional taxes, national insurance, or other penalties if they get it wrong. So there is always a danger, I think, at the moment that post 6th of April 2021, that many assignments are going to be deemed to be found to be inside IR35, which again, if you drill down through the guidance, that's not necessarily what's intended. What I suggest you do, if you're not familiar, look at Employment Status Manual 10,000. That was updated on 12th of November 2020. And that sets out the obligations of the hirer. And Hmrc expect each hirer to undertake a complete and thorough determination. And in the words on the website, it says to act in a way as a prudent and reasonable person in the hirer's position. Now, that's a very broad statement. And Hmrc make it clear that if a hirer has limited knowledge, it is under an obligation, a positive obligation, to go out and find out what their obligations and responsibilities are when making these status determinations. And they also make it clear that ignorance of their obligations is no defence. So obviously what I would say, if in doubt, you must or should take independent legal advice. Also look at ESM 502, which also provides some further guidance from Hmrc. And also it involves you as organisations considering how the assignment is going to be controlled. How is the contractor going to be supervised and managed? Are there any codes, regulations, or other statutory obligations that govern the work to be undertaken by the contractor? Also as well, look at the work that is to be done. Who decides the work? What are the tasks to be performed? Where is the work to be done? Who decides again? Are there any set hours? Is there any flexibility? What arrangements are in place to cover holidays, absences? And again, when is the work to be done? Again, are there set hours? How's the work to be done? Are there rights to substitute? And again, substitution has always been a key issue in IR35, particularly over the last number of years and looking at the public sector. But again, where you have substitutions, you've got to look and see whether or not does substitution actually occur, because even though you've got a well-drawn contract, Hmrc will look behind that contract. And you certainly have difficulties as well where the contractor who's providing the service is very highly skilled and is governed by regulation. And you get that particularly in the pharmaceutical sector, where you have individuals contracting, providing pharmacovigilance, or being a responsible person, responsible for drug distribution. And those people, if they are providing services, are very difficult to replace. And also as well, look at the structure of your payments that are to be made under the contract. Are expenses paid or unpaid? Is there mutuality of obligation? Because again, that tends to point towards employment. Is there any financial risk on the part of the contractor? Is the contractor really running his own business? So there are a number of factors that have to be taken into account at this stage. But also as well, I think employment tribunals and tax tribunals are very skilled and experienced in dealing with status issues. And I had a case there recently that involved the issue of determining status, where a contractor was providing services to a hirer. The terms of the assignment were that the individual concerned was obliged to provide services to the end hirer's client on 3 days a week. The contractor was paid a set fee, daily rate, also all the equipment was provided. But the interesting point arose over status was the tax returns in that particular case, which clearly indicated that the contractor had represented to Hmrc that he was self-employed, as opposed to now claiming to be an employee. So again, tax returns, historical tax returns could also be of interest to hirers.
Yeah. Okay. And one of the things we hear from Hmrc is the need to exercise reasonable care. What does that mean in the context of making status determinations?
Right, as I was saying earlier, Hmrc make it clear that reasonable care means acting in a way that would be expected by a reasonable and prudent person in the hirer's position. ESM 500 sets out 5 key steps that hirers should be taking into account when looking at reasonable care. And the first is to complete the CEST test, consider the Hmrc guidance, seek professional advice, and also importantly, the person who's actually undertaking the determination should know precisely what the assignment entails, and also be aware of the various tests that I was alluded to earlier on. And also as well, be prepared to review the assignment and the decision on a regular, ongoing basis. But also Hmrc make it clear what is not reasonable care is firstly determining that all assignments are within IR35 without considering the facts of the particular assignment and the different arrangements. Failing to reconsider a decision when challenged by a contractor, and also the absence of proper training to those staff at the hire outfits who are making these determinations. If there is an absence of proper training, then that's no excuse. And also inputting incorrect information into the CEST test is also, again, considered not to be reasonable care. So again, what you should be doing is adopting those 5 tests.
I was just going to add into that, Michael, if I may. Good afternoon, everybody. I was just going to add the point there you mentioned around who does the test, a really important one. Clearly, someone needs to know the nature of the assignment that someone's engaging with, but we do see some issues sometimes where hiring managers are carrying out those assessments, because clearly the hiring manager's got you could argue, a vested interest in trying to keep that contractor outside of IR35, because they can foresee it's going to be difficult to recruit or retain that person if they go inside. So bear that in mind for any clients that are looking at this. The hiring manager should have some input into it, but clearly it needs to be done by someone like a HR director or have some oversight from a HR director who understands the impacts of this from a financial and risk perspective as well.
So if we've taken reasonable care and we've gone through those checks, is there anything else we need to do to make sure that we've discharged our duties in making those status determinations?
Just following on from what Dan was saying, David, was I think the primary point is to adequately make sure that the staff who are making these determinations are properly trained, and to introduce processes that help those staff when reviewing working arrangements. And again, key point being that the person has a good knowledge of any assignment, and any decision is actually based on facts that relate to that particular assignment.
Yeah. Okay. Now, Michael has talked about the CES tool, the Hmrc tool, Dan. I'd like to bring you in here just to tell us about some of the other different tools that are available and that can be used, and what are the differences?
Yeah, so there are a number of different options. I think Hmrc have been very clear to say that you don't have to use the check employment status tool, although I'd agree with Michael. You know, if Hmrc have said they'll stand by the decision if you've taken reasonable care, then why wouldn't that be a starting point for you as a business? But I think it's not quite as clear cut as that for some clients. I think one of the key factors for a start is how many contractors do you have within the business? CEST is quite a manual process to use, so it'll work for small populations, it'll work for, you know, maybe 20, 30 contractors, but once you're starting to scale up from that and starting looking at more significant numbers, you might actually want to consider some of the other offerings on the market, and they tend to be online based, so they can get the algorithms behind them in terms of the logic around the questions and the various weighting towards mutuality of obligation, substitution, the other points that Michael went through. So you can get through quite large populations with those tools. Another sort of Achilles heel a little bit for CEST is that it does come out, I think, in about 15% of the time it comes out with an undecided for some placements, which isn't great. The other commercially available tools tend to operate more on like a red, amber, green spectrum, if you will. So you'll be able to see along a spectrum as to how much of a fail or a pass someone is, and they'll also give you some feedback as to which areas of IR35 was someone weak on, perhaps lending itself to you making amends to working practices. If control was the issue, it will give you a little bit more feedback than just simply saying you're inside, you're outside, or undecided, which is the CEST output. So those tools are available. We know a number of those providers. I think, you know, I've nothing against those providers. I think they've absolutely got a good, you know, it's their bread and butter is assessing IR35. You could argue they've factored in things like mutuality of obligation more so than the CEST tool has. But obviously, ultimately, no one really knows what status determination is until you sat in front of an appeals judge, basically, on the point, and that's what everyone wants to avoid. So taking reasonable care is the key thing. Doesn't matter how you're going to do the assessments. The assessment is only as good as the inputting that you're putting in. So make it factual, as Michael said. Keep records of what you're putting in. Keep records of your process. So if Hmrc do come along to say, well, what was your assessment approach? What rigor did you take? And then you can clearly show them these are the steps that we took. These are the outputs. And that's how we arrived at our decision. And if you're doing that, then I think that's perfectly acceptable.
Yeah. So during the assessment process, we've heard it's important to involve all parties and to get that communication right throughout the supply chain, bringing everybody along with you. But what is the process? What happens if a worker challenges the decision? What are the options there?
Well, on challenging the decision. Oh, sorry, is that a question for Michael as opposed to myself?
Fight it out between you. Let's hear from both of you.
Michael, you go first.
Obviously, under the new regulations, the hirer must allow a right of appeal, and if their original decision is challenged, and the hirer then is under an obligation to determine that appeal within 45 days. So the hirer is obliged to reconsider their original decision-making process. and then issue a new decision with reasons as to why any appeal is rejected. And it may simply be that if the hirer believes that they've got it right the first time round, is that they'll simply go over again or review their processes and come to the same decision. But what we were talking about earlier, that if that is the case, there is only a limited room as to what the contractor can do next. There's no right on the part of a contractor to be able to appeal that decision to the civil court, for example. The only route forward is possibly appealing to Hmrc when they put their tax return in, which is not very satisfactory as far as the contractor is concerned. But it seems to me that where the government stand on this at the moment is that if the contractor doesn't like the decision, then they're obviously free to look elsewhere for another assignment.
So yeah, so just sort of jumping on that as well, agree with what Michael said. Very rare, I've not seen any examples of a client overturning their initial determination even after an appeal from a contractor. That's not to say it doesn't happen out there, but I think 99% of the time once the decision's made, it's unusual to see a client overturning that decision, but statutory requirement is they have to provide the appeals process. Michael was absolutely right. The next step for a contractor then would be that they could write down on the next tax return on the self-assessment that they believe that the taxes are being deducted unfairly because they dispute the status, and that they absolutely have got that as recourse. It'll be a brave contractor that does this, clearly, because they're absolutely putting themselves head above the parapet and saying, Hmrc, I believe I've been overtaxed here, so they need to be very, very clear on their position, and also the backdated position, I suppose, as well. But you do see contractors that actually do feel aggrieved by the determination. That's one of the reasons there can be quite a lot of resistance to joining an umbrella company or going PAYE with somebody, because when a contractor makes that decision, any income then that's then processed is obviously employed income, so the tax is legitimately deducted. There is no recourse over that tax. The only way they could continue the argument is for them to continue to get paid through their limited company, someone doing a deemed calculation and deducting these new taxes that are due under IR35, and then have the argument with Hmrc moving forward. That would allow them to potentially get recourse back on that tax. So for that reason, you do see some contractors wanting to get paid through to their limited company because they want to continue the fight. But it's rare. You don't see that many contractors so bullish, basically, that they want to have that pitch battle with Hmrc directly.
I think one other point as well arising is that under the new regime, when it comes into force, the status determination will have been made before the assignment actually commences, or should be. So the contractor at the outset will know what the hirer's position is. And I guess they're unlikely to start work if they don't agree with the assessment, or to start work. And if the hirer has already decided that the assignment is within IR35 and starts deducting taxes, is the contractor really going to start the assignment knowing that taxes are to be deducted, and knowing that they have to go through an appeal process, which they only have very limited means of challenging. So again, it remains to be seen what will happen, but I just wonder whether in practice, are there going to be that many appeals when the hirer does have to make their position known at the outset?
That's a good point. I think at the moment, we've got this big rump, haven't we, of people that are on existing assignments that are moving forward and need to basically be assessed. But what you'll quickly, and we saw this with the public sector in 2017, once you get over the hump of this initial population, what hirers or recruitment partners are doing is actually advertising roles based and very clearly stating whether this role is inside or outside of IR35. So the contract is very clear what the nature of the engagement is from the beginning, and therefore the noise diminishes. The reason this is all sensitive is obviously because people were operating under one regime and now it's moving to another. So the good news, guys, is that once you've got through this process for April and May, the noise does subside quite rapidly. And then it's as Michael said, you've got to make sure you're doing an ongoing assessment, probably every 6 to 12 months, review that IR35 process, because over time, obviously, working practice can drift a little bit. So, but generally, in terms of the contractor heat that you'll be feeling over the next month or so, it will start subsiding quickly.
So far then, we've looked at the obligations, the risks and the actions for end hirers in this process. So let's now consider the obligations further down the supply chain, if you like, and look at those for agencies, other third parties and contractors. Starting with contractors, Michael, what are their obligations in this?
I mean, as far as contractors are concerned, I mean, what they should be looking at, I think, in the first instance is, are they really employees of the hirer? Are they really in business on their own account? What financial risk are they taking in running their business? Have they invested capital into their business? Is there a possibility that they might make a loss on this assignment? Alternatively, can the contractor profit from sound management and working in a way that increases profitability, again, which would tend to be, not necessarily being an employee? Does the contractor have insurance who pays their expenses? Are they able to negotiate rates of pay? And all those factors, I think, can be put forward, maybe in a positive way, to show that they are running a proper business and that they are not necessarily employees of the hirer. Obviously having regard to all of the other tests that we spoke about earlier. But I think the contractor needs to be honest with themselves, and are they really running their own business? Are they taking financial risks in operating their services? As far as recruitment agencies, I think, or employment businesses are concerned, obviously, if they are the payer, they're going to be extremely concerned that the status determination that has been made as far as the contractor is concerned is indeed the right one, because again, as the payer, if that status determination is incorrect, they could end up having to pay or meet any shortfall of unpaid taxes, national insurance contributions. So I think if you're advising an agency or an employment business and they are uncertain about the outcome of the status determination, then they need to be asking the hirer detailed questions as to how they have arrived at their decision, because of the potential liability that might fall on their shoulders if ultimately that status determination is incorrect.
And anything to add from an agency and umbrella or the third party perspective?
I think Michael's addressed one of the key things here, which is that obviously the recruiters are really keen to make sure the client gets on with the determinations, let them know the outcome, and they can crack on with conversations with the contractors around new assignments, contract rate increases potentially. So the sooner the better that the decisions can be made. I think all the recruiters will be keen to get that information quickly. I have seen a few examples where there's been some questionable outside determinations made by the client and then passed down to the recruiter. So exactly what Michael was saying there, that puts the recruiter in a position where they need to be comfortable on that outside determination, and if they're not, they should question it and go back to the client and try and understand exactly what the rationale here is, because there is nothing in the legislation that says if the hirer gets the decision wrong, they've got risk. It says they have to take reasonable care, but if they can, theoretically, Hmrc have spoken about this, a client could theoretically take reasonable care and just get the decision wrong. But the way the legislation is written, that tax liability sits with the fee payer, which is often the recruiter. Clearly unfair in a lot of commentators' opinions. As far as the recruitment businesses are concerned, we don't quite know why the liability doesn't sit squarely with the client, because it would make sense there, but that's not how it's drafted. So you need to keep your eye out on that. I think also then, if you've got for recruiters where you've got contractors agitating still to be paid through the limited company, then they need to be considering if they've got the technical payroll capability to process these payments under the new legislation and pay the contractor to their Psc, but now net of things like employers and I and paying away. It's not easy. It means you're splicing together payroll and accounts payable systems, which, unless you've got sophisticated software to do that, that can be onerous and it's easy to get it wrong. So if you're going to go down that avenue, make sure you've got the right kit, or outsource it to a payroll provider that specialises in it, and make it a lot easier for yourself, in the same way you may engage with an umbrella company, and again, outsourcing the payroll headache to the payroll business.
Just one other point, Dan, sort of following on from that, I've seen as well, certainly within the last few months, that hirers are also wanting to find assignments that are not caught by IR35, and then are seeking indemnities from, recruiters, employment businesses, which is obviously wholly wrong. But again, it's the hirers using their financial muscle to insist upon indemnities, whereas I think the situation really should be the other way round. The recruiters and the employment businesses should be seeking indemnities from the hirers on the basis, if they get it wrong, then why should the agency or the recruiter have to pick up the tab for the unpaid tax? Yeah, but again, that's a commercial negotiation.
Agreed, but I suppose commercial reality dictates client is king, and therefore it makes agencies feel obliged to sort of, well, if we don't do this, someone else will, and you've got that whole sort of, argument around it. Right? Yeah, I agree completely. There was some awkward contracts being issued down, which put some pressure on the recruiter. So have to think about ways that you can mitigate that. And just linking that back into the alternative IR35 assessment question from earlier. Some of the other commercial tools that are around that do also offer insurances. So if you get an outside decision via one of these tools, you can then purchase some insurance that protects the fee payer, which could be the agency and the client, actually, from tax risk. So I'm not advocating the use of that across the market. I think different hirers have got different views on it, whether they think it's a good or a bad idea to sort of get these insurances in place. But I feel if I was a recruiter getting pushed down that road of having to pay gross and I was a bit uncomfortable, maybe you could recommend to the hirer to use one of these alternative commercial offerings with an insurance-backed product, which may give some comfort. But I'd still say the agency needs to be nervous, but maybe that's one way of hedging the risk a little bit.
We mentioned contracts there, and I think one of the approaches that is maybe coming to the fore here in relation to contractor engagements is the statement of work contract. Michael, will you outline for us what it is and what it should contain, and what do we think about it?
I mean, certainly over the last few years, it's been quite common to have what I term as framework agreements, and within those agreements, statements of work. So it's an agreement essentially between the hirer and the personal service company of the contractor, and it's drafted in such a way so as to make the assignment appear to be part of a commercial contract. So you're structuring the assignment as a commercial contract. The contractor generally sometimes is under the contract supporting a defined project, and within that commercial agreement you set out and define the contractor's responsibilities and obligations, and also the deliverables and outcomes that the contractor is obliged to meet. What you make clear is that the contract is not to be, or the contractor is not to be, the subject of control, supervision or direction of the other party, because again that leads into an IR35 difficulty. And again, within the statement of work you should include a right to substitute if at all possible, and set out where the services are to be provided, that the contractor generally should be providing their own equipment on the basis they are in business on their own account, and within the commercial contract identify timelines, targets and phases, and link payment to achieving those targets and milestones, and also try and build in some kind of penalty clause where the contractor could be responsible for any losses arising as a result of their own work. So those types of agreement we've seen quite a lot of, certainly over the last couple of years. But again, I think as we've said before, you can have a very elaborately drawn contract, but where there is a dispute over tax, Hmrc have made it clear that they will look behind any elaborately well-drawn contract just to make sure that what's actually happening in practice is accurately defined by the commercial agreement, because if it's not, then Hmrc will look behind that agreement.
If I could just add into that as well, I think the key word there is risk around what Michael was talking about there. So, you know, if you're going to look down at a statement of work piece, and one of the key elements has got to be that the contractor or the person delivering that service has an element of risk in there. So making sure there's a standard of work that's applied, and if not, there's a withholdment of payment. That's an important element to make it truly stand up to scrutiny. The byproduct of that is that it doesn't necessarily make it a palatable offering for contractors who are actually just looking to turn up and do work and get paid their £500 a day, irrespective of the delivery. So statement of work, absolutely, if contracts are drawn up properly, will take you out of the remit of IR35. But whether or not commercially it's actually practical to do so is a different question. So we hear a lot of people talking about it in the market, and do think there'll be an increase in statement of work. Probably just reflects the fact that people have been quite lazy in the way that they've been structuring contracts previously, because the risks not been sat with them, and Hmrc have spotted that, hence they've moved it up in the chain, and then all of a sudden there's an obligation on people to do things properly. So if the contractors will accept this additional liability in statement of work, it could well be a good solution.
Okay, so our next subtopic then relates to how contractors might be engaged if their engagement is deemed inside IR35, and we're told that that's going to be the majority. If I can ask Dan to first define for us then the terms joint employment and PEO.
Two buzzword phrases that we're hearing mentioned quite frequently at the moment. We'll start with PEO first. So I've been talking about this for quite some time now. It's been a model that Giant have operated for end hirers for a while. PEO stands for Professional Employment Organisation. So effectively, very similar to Umbrella in the fact that the PEO business employs the contractor, provides that contractor to the hirer directly or to the recruiter, and the same way you would with an umbrella engagement. The key difference, though, is that under an umbrella engagement, the rate that's paid to the umbrella legally is not the contractor's money, that's the umbrella's money. So if I'll pick an example, £500 a day, let's say. Once the umbrella's deducted the bits and pieces for employers' costs as well as margin, you'd be left with, say, £420 a day, which is the worker's rate. That's then legally the contractor's money, and it's on that number that we have to calculate PAYE and employees' NI. It's their gross taxable pay. Contractors get confused, though, that actually they thought they were on £500. Now the pennies drop. Actually, I'm not. I'm on £420 a day because the umbrella's taking their slice. So it creates noise. What the PEO does is cut through that. Under a PEO, what you would do is offer the worker an assignment on £420 a day. The wage slip that the PEO produces states clearly on there £420 a day is the rate of pay. The only deductions the worker sees are PAYE, income tax, and employees' NI, and the net's paid to their bank account. So it looks very similar to normal salaried employment. And then subsequently, the PEO would invoice the agency or the hirer for the employment taxes and the margin. So it gets you to the same point as the umbrella model does. It's just a more transparent to the worker up front when the work's being offered what the real rate of pay is. And that's very important to bear in mind and interesting, because I think you've got a strong direction of travel from government around things like the Good Work Plan, around making sure that workers are clear on the real rate of pay that they've got. The recruiters that are on the call will know that you now have to do key information documents for contractors when you're offering work, and that's all around trying to give transparency on this real rate of pay. So we see the PEO model potentially getting up ahead of steam, and it's been talked about quite a lot now as an alternative, but it'll take a good number of years, I think, before it outstrips the umbrella model. The other phrase that you used, Dave, was co-employment. So I think I'm also very keen to point out that when the acronym PEO is being mentioned in Giant's world, very vanilla and straightforward. It's very clear the PEO company is the employer of record. What we're seeing is a sort of hybrid model, if you will, that's called PEO also, but also brings into play dual employment. So the contracts would say that the worker is actually dual employed by the PEO provider as well as the recruiter or the client, which technically is not an issue. That's a model that could technically work, but the employment lawyers are extremely nervous about this concept of co-employment because not really been thoroughly tested. And you've got to make sure that all the parties that are involved in this arrangement are absolutely working together to make sure they're satisfying their obligations. My view on it is that I think the real reason why this model gets pushed heavily is actually for VAT purposes. It's a model to mitigate VAT. You see it heavily used in healthcare, for example, where there are issues around VAT on supply. And Hmrc may argue that this is a contrived arrangement just purely designed to avoid VAT because there's no other commercial benefit for offering this co-employment piece. So I'm not saying it doesn't work. I'm just saying that my view is that it's risky. Why would two parties increase their liability for any other commercial reason other than potentially this VAT point? So just be aware of that. There are a few different versions of the PEO model going around. My view certainly is the straightforward one that I've explained, where the worker gets clarity on the pay rate up front. I think does have a place to play in recruitment supply because it avoids the contractor being confused. They're very clear when they take the work on the rate of pay, and there's a lot less noise on that model. We certainly see that at Giant between our umbrella service and our PEO model. The level of queries under the PEO are significantly reduced.
Michael, is there anything in either of those approaches which assists in getting around IR35?
Well, potentially, as what Dan has said, is correct, but I suppose the obvious difficulty is this concept of joint employment, that if the PEO is operating the payroll and the taxes, you've got to work out who's then going to be responsible, because the PEO won't have control or day-to-day control of how services are provided on site. And then if there are claims made against the joint employer, then who is going to pick up, the liability for those claims? Because at the end of the day, any claim is probably going to arise as a result of a dispute that happens on site, whereas the PEO is generally not, or doesn't have any control over the way the services are provided. I think Dan's absolutely correct, particularly in healthcare. Joint employment is starting to emerge as well as a result of government reforms. You might have, for example, a collection of GP practices that operate what's called PCN, and they will hire additional staff to service, the various GP practices, maybe a physiotherapist or a pharmacist or somewhere like that. And again, joint employment is starting to arise in that type of scenario. But again, it can be fraught with difficulties. And I think if you're going down the joint employment route, the parties need to define what their responsibilities and obligations are towards each other. And if it is at the end of the day the responsibility of the hirer who exercises a degree of control over the individual, then it may well be that any claim that arises should be picked up by that party rather than both. Equally, if the PEO makes a mistake in the way it calculates tax, then again, that should be their responsibility and not the other party. So it needs to be properly thought through.
Okay. And just before we move to questions then, just conscious of the time, Dan, briefly, if you will, what are the other payment options there are, and how do they compare? What are you finding to be the most popular?
Well, I think there's a couple of other options. Obviously, the obvious one is that the hirer or the recruiter may offer to employ the worker directly themselves, maybe on a fixed term contract basis. That's certainly one option. It's not a popular one for the contractors or for the agencies or the hirers, is often what we see, because they're obviously taking on additional employment risk and cost of processing. Recruiters tend to want to focus on recruitment, not dealing with those issues. Similarly, for a hirer, it might look like the simple solution initially, but then actually a contractor population onboarding and offboarding rapidly onto your permanent books may be an issue. So if that PEO model that I mentioned before fits neatly in there, if that was an alternative, you've got then a contractor dedicated payroll that you can use separate to your own. Umbrella we've talked about, I think that's going to be easily 75% of the market that gets deemed inside IR35. Those contractors will find their way through to umbrella companies via agency or end hirer PSLs. And then the last option is the deemed model that I touched on earlier, where you could a payroll business can act as the fee payer. Again, we offer this solution where we will deduct all the taxes due, pay off to Hmrc, and then push the net payment to the workers PSC. So they take it into their business bank account. You're probably going to get maybe 10% of contractors that might look at that as an alternative for the reasons I mentioned before, why they may not wish to go across to an umbrella. So you've got umbrella as a dominant, PEO as an option, fee payer also. But I will just say, if we're wrapping up before questions, the key part on all of this, no matter which payroll options you pick with and which providers you go with, that we talked about risk around IR35 today. If you choose to have the wrong payroll business involved in your supply chain, then IR35 risk becomes a moot point. You've got much bigger risks involved in non-compliant payroll providers. So if you are going to look at outsourcing, please make sure you pay attention to your due diligence, do your RFIs, look to trade association accreditations like the FCSA that we're a member of, and others, but just don't rely just on that solely. Do your own due diligence, check balance sheets, check financial stability and trading history, because you do not want to be getting a non-compliant offshore type provider in your supply chain that will present far bigger risks.
Yeah. Okay, thank you to Michael and Dan so far. Let's move to some of your questions then. And as we do that, can I please ask you to redo the poll question just to see how far anybody might have moved in the last 45 minutes or so. If we can pop that up, please. Holly, thank you. So how are you now feeling? Same question. Not at all reasonably or very confident. Okay, right, to the questions then. A simple one to start with, Dan, I think. What is the first thing I need to do?
Well, the first thing you need to do is probably just understand how many contractors have you got? That's probably the first simple question. That's the one that a lot of businesses struggle with. How many contractors do you have? And then from that, you can start working out, okay, what's my approach going to be? Because as I said earlier, small populations will lend itself to one option, larger populations another. But that question in itself can be difficult for some businesses to answer because they've got contractors coming through from recruiters directly, invoices through to accounts payable. So I think that's your first fundamental. How many contractors do you engage with? If you've got your arms around that, then all your other process decisions and approach decisions will start to fall into play.
Yeah. Okay. Right. Okay, and the next one then. Generally, what is the process of submitting the SDS to the contractor? So how soon before the commencement of the agreement must the SDS be submitted to the contractor? Michael?
Right, I mean, the Hmrc guidance, all it suggests is that the hirer will be responsible for deciding the contractor's employment tax for services to be provided. That's generally all it says, but what you're going to have to do as hirers is to inform the contractor before the assignment starts what their tax status or employment status for tax is at the outset. So it seems to me that that is the obligation on the part of the client or the hirer to give that determination status at the outset after it has taken into account the various criteria and factors that we spoke about earlier and reasonable care. So that document should be given to the contractor at the outset before the assignment commences.
Right.
Yeah, if I could add into that as well, Dave. So I completely agree with new work being placed. The assessment should be being done by the client. As we said, the role gets advertised inside or outside. That's easy moving forward. With the guys that are on existing assignments, I have heard of contractors trying to push clients to leave this SDS determination up to right to the last minute, so as close to the 6th of April as possible. Potentially they're worried about views on, backdated tax positions, or even the client issuing the determination too early. But so I think it's reasonable for the client to be starting to issue those determinations towards the back end of February, beginning of March, no later than that. We've got a 45-day appeals process to facilitate. So if you work backwards, you really need to be doing it by the end of February. So issuing your determinations as quickly as possible in the month of Feb is my recommendation, just to make sure that you're giving time for the appeals process to be heard.
And just on that, is the second part of that question is there an obligation on the client to obtain some sort of declaration stating they have read, understood and agreed with the SDS?
No obligation as far as I'm aware, Michael. The only obligation is for them for the client to send out the determination and the rationale for it, which could be a sentence or it could be a paragraph. Some people use the CES tool because it's got all the questions and all the answers next to it, so that gives a rationale. But there's no obligation for you to confirm the contract is read and understood. It's only to facilitate an appeals process if they wish to.
Yes, the obligation is to provide the contractor with the answer and with reasons. That's the only obligation.
And another legal one then, is it legal for a hirer to write into contracts with the PSC that the PSC must take responsibility for any future tax demanded by Hmrc?
No, because the obligation, well, if the hirer, I suppose, determines that an arrangement is outside IR35 and they are the payer, obviously the risk is going to fall with them. There's nothing to stop a hirer getting some kind of tax indemnity from the personal service company to pay or to make good or to indemnify them in respect of any unpaid taxes. But the reality is most personal service companies don't really have any assets. They're simply a vehicle used for the purposes of rewarding or paying the contractor. So it may very well be that what hirers would have to do is get a personal indemnity from the contractor themselves, and whether the contractor would want to give that indemnity, I don't know. Again, it's a commercial arrangement, but the primary liability would fall on the hirer.
Yeah, agreed, Michael. Indemnities are only worth the value of the company that are giving them at the end of the day. Each PSC is a small value. So if a client took that approach and said, we'll pay you gross, but it's your responsibility to pay your right tax, you can well foresee that that liability is not going to get met by these small companies, and it will flow back under the legislation to the hirer. So it would be extremely risky. Similarly, where hirers are pushing down indemnities to recruiters, again, it's only as strong as the recruiter's balance sheet and ability to pay. So got to be careful about just taking that approach and thinking that's a get out of jail free card, because those businesses fail, given the economic climate we're in at the moment as well. Then obviously there's some risks around that. As always, if you're feeling the decision is actually they're inside, then I'd suggest the bitter pill to swallow is actually to get a fee paid to deduct the right levels of tax if the worker still wants to get paid, and make sure that's being done by a reputable business with a strong balance sheet, as I said earlier.
And we can probably clear up the answer to a number of questions here around workers who are already they're contractors, but they're paid PAYE by agency, or they're self-employed rather than the PSC. They may be employed by an umbrella company. Does the hirer have to do a status determination on those workers?
Well, IR35 won't apply unless the contractor is using their personal service company. So, answer no.
Yeah, fine. Okay, good. Okay, I think that that covers quite a number for us. Perhaps related to that, if someone is classed as employed, do they still, and again, I'm taking that this is a contractor who is effectively being payrolled by the end hirer, do they still need to send in invoices, and how do we treat them through the payroll? Do they get added to the payroll system as an employee, and do we disregard the invoice from the creditor's ledger? Dan, a detail one, you might just want to...
It highlights the point I made earlier around these fee payer models, or deemed calculation models are difficult. To be clear, you're only processing the worker's pay needs to be deducted as if it's employment income, but they have no employment rights. So the contract for service engagement would stay, but you're going to deduct tax as an employee. The way that we do it is actually to agree a new assignment rate with the worker. So £500 a day is the current assignment being paid to the limited company's bank account. Do a deduction for employers and apprenticeship levy, margin if you're a payroll business, clearly not appropriate if this is the client. Reset the new assignment rate to the worker, creating the fact that then has to be RTI'd and paid off to Hmrc. So that's the way that we approach it. So it's very clear there's a new assignment rate being agreed, so it's none of this unlawful deductions from an existing rate. You see a lot of noise on from contractors arguing that point, that hang on, what's your basis for making this deduction from my existing rate? So what we do and what we think is the right way to do it is you agree a new assignment rate, which is now inside, contractor accepts that, and the gap there is the amount that gets paid over. But it is not easy, it's not simple, it's complex.
Okay. And Michael talked earlier about the qualifying level, if you like, for the end hirer in terms of their size, the £10 million turnover, the balance sheet, and the number of employees. So perhaps just emphasise that here. What are the implications regarding the SDS for those smaller end clients? Is the middle agency responsible for doing determination statements instead?
I can go on that if you want. My answer would be no. So if the hirer, the person who's receiving the service, is a small business and satisfies two of those three tests, so turnover less than 10.2, balance sheet less than 5.1, less than 50 employees, if you can tick two of those boxes, and you're bearing in mind a group structure here, it's not just about one entity within a group. If there's a group, you have to consider the whole group. But if the company is small, none of what we've gone through in terms of the new process on determinations applies. The old regime applies, which is the contractor that makes their own decision on their status, and it's the contractor that has the tax risk. So therefore, there is no obligation on the hirer to have to do any determinations.
Yeah, I agree with that.
Okay. Okay, thank you. Well, there are still some outstanding questions. I would suggest we pick them up afterwards. We'll anonymise them and answer them, and we'll make sure they all get addressed. But for the time being, thank you to our speakers today. I think that's very thorough and very complete. The poll, you'll be very interested to know, tells us that when we started, there were 32% who were not at all prepared for the changes, which is kind of worrying at the beginning of February. That, I'm very pleased to say for you guys, has now moved to 0. So you've moved everybody forward from not being at all prepared. So the reasonable has gone from 63 to 88. Which is good, and we've actually moved another 7%, started at 5 and it's gone to 12, who are now very prepared. So
reassuring, Michael, we can
absolutely
we've helped, which is good. I would say I just had a quick flick through, actually there's some great additional Q&A there, so I think between ourselves and Michael, we can definitely make sure we respond back to those questions as a takeaway. And thanks very much for engaging. It's been a great level of attendance today from everyone. Thank you.
Yeah,
good.
Thank you.
We will be following up with a link to a recording of this session, and the email will contain a quick questionnaire to let us know how we've done. We'll include details for Michael and Dan. As I said, if you want to pick up any specific questions with them, you can do. And Also, we'll also put in another copy of the link to the first session, which I think complements this very well. Slightly higher level, but covered everything as well. So that will be included. And as Dan says, we'll cover the outstanding questions, because there's still quite a number, and they're still coming in. So so that's good. Thank you to you, the audience. You've stayed with us, and hope you've enjoyed it. I hope it's been worthwhile. Thank you from us all, and goodbye.
Thanks, everyone.
Goodbye.
Thanks, guys.